Welcome back to the Longacres Finance channel. It's time to take a look at my top 10 high-yield dividend stock list for June. The list remains unchanged from the prior month. In first place, we have T. Rowe with a 3.7% dividend yield and a 5-year historical dividend yield of 2.46%. Based on dividend yield theory, it looks about 33% undervalued. In second place, we have Morgan Stanley with a dividend yield of 3.24% and a trailing 5-year dividend yield of 2.24%. Based on dividend yield theory, it looks about 30% undervalued right now. In third place, we have Best Buy with a dividend yield of 4.19% and a trailing 5-year dividend yield of 2.34%, implying a potential 44% undervaluation. In fourth place, we have Advance Auto Parts with a dividend yield of 3.11% and a trailing dividend yield of 0.51%, implying a potential 83% undervaluation. However, Advance Auto Parts has been growing their dividend at a very fast rate, and as a result, their dividend yield has grown pretty quickly, and the trailing dividend yield hasn't kept up. So dividend yield theory isn't really a good valuation technique for this stock. In fifth place, we have BlackRock with a 2.93% dividend yield and a trailing 5-year dividend yield of 2.29%, implying a potential 21% undervaluation. In sixth place, we have UPS with a dividend yield of 3.33% and a trailing 5-year dividend yield of 2.82%, implying a potential 15% undervaluation. In seventh place, we have Restaurant Brands with a dividend yield of 4.22% and a trailing 5-year dividend yield of 2.95%, implying a potential 30% undervaluation. In eighth place, we have Blackstone with a dividend yield of 4.44% and a trailing dividend yield of 4.9%, implying a potential 10% overvaluation. In ninth place, we have Digital Realty Trust with a dividend yield of 3.45% and a trailing 5-year dividend yield of 3.25%, implying a potential 5% undervaluation. And in 10th place, we have 3M Company with a dividend yield of 3.99% and a trailing 5-year dividend yield of 2.96%, implying a potential 25% undervaluation. So collectively, the 10 chosen stocks for June have an average dividend yield of 3.66% and a trailing 5-year dividend yield of 2.67%, implying that they're collectively about 28% undervalued. For the most part, they all have pretty good payout ratios, with the exception of Digital Realty Trust, that has a payout ratio of 97%, and Restaurant Brands is on the high side as well, at 78%. The 5-year dividend growth rates range from a low of 5.51% for UPS to a high of 68.4% for Advance Auto Parts. In terms of dividend growth, Advance Auto Parts, Morgan Stanley, and Restaurant Brands look the best, with Best Buy, T. Rowe Price, BlackRock, and Blackstone looking pretty good as well. And UPS, Digital Realty Trust, and 3M are on the lower end. Comparing the June list to the May list, the dividend yield has gone up from 3.58% to 3.66%, with the potential undervaluation improving from minus 27% to minus 28%. Let's take a quick look at how the May stocks performed. First up, we have Advanced Auto Parts that lost 4.89% last month. Best Buy lost 8.75%. BlackRock added 7.11%. Blackstone added 15.97%. Digital Realty Trust lost 4.47%. 3M gained 4.56%. Morgan Stanley added 6.89%. Restaurant Brands shed 8.02%. T. Rowe Price Group gained 3.29%. And UPS added 2.13%. So collectively, the average return for the May watchlist was 1.38%, which is a pretty good month. However, VYM tacked on 3.52%, which is a much better return. The collective return for all 60 past and present watchlist stocks was 3.64%, which was a little bit better than VYM. Let's take a quick look at some of the best returns. Amgen added 10.97%. Franklin Resources added 10.13%. Bank of New York Mellon added 10.82%. Cummins added 11.33%. JP Morgan added 10.78%, Progressive added 11.2%, and Paramount Global added 17.89%. So while the May watchlist underperformed VYM, it did beat SPY, that had a return of only 0.23%. After May, the year-to-date return for 2022 for the watchlist is minus 3.98%. VYM is performing better with a loss of 0.12%, and SPY is performing much worse with a loss of 12.78%. All of the watchlist stocks have a return of 0.44%. I've tracked the watchlist since November of 2020, so now we have 19 months of returns, and the cumulative gain for the watchlist is 41.22%. VYM is performing better, returning 46.33%, and SPY is performing much worse, returning 29.14%. In terms of annualized returns, the watchlist is averaging 24.36% on an annualized basis. VYM is returning 27.18%, and SPY is returning 17.53%. So the watchlist is underperforming VYM by 2.83% and beating SPY by 6.83% on an annualized basis. The best investing approach for a dividend strategy is with a buy and hold portfolio. I've been tracking 2 buy and hold portfolios, one that I started in 2021 and one that I started in 2022. Both buy and hold portfolios use the watchlist to determine which stocks to invest in. Each month, an equal amount of money is invested into the 10 chosen stocks for that month. The positions are never sold, and all dividends are reinvested right back into the issuing stock. So let's take a look at how the buy and hold portfolio is performing. The 2021 buy and hold portfolio had a return of 3.95% for the month of May, which is a better return than VYM, and a better return than SPY. The cumulative return for the 17-month period since this portfolio was started is 31.9%. VYM has a return of 26.05% over this time period, and SPY has a return of just 12.3%. This portfolio performed very well in 2021, returning 32.97% versus 26.21% for VYM and 28.76% for SPY. In 2022, it is slightly underperforming VYM with a return of minus 0.8% versus a return of minus 0.12% for VYM, and it's beating SPY by a big margin, as SPY has a return of minus 12.78% on the year. In terms of annualized returns, the portfolio is averaging 21.58% versus 17.75% for VYM and 9.09% for SPY, so it's performing quite well. The 2022 buy and hold portfolio has a much shorter track record. We only have 5 months of data right now, and the portfolio returned 2.5% in the month of May, underperforming VYM that returned 3.52%, but beating SPY that returned 0.23%. The total return for the 2022 buy and hold portfolio is minus 2.36%. So as of right now, it's still underperforming VYM that has a loss of minus 0.12%, but it's doing much better than SPY that has a loss of minus 12.78%. If you enjoyed the video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.